Hey everyone. So it's been a slow day. Not much has happened. Elon Musk has been pretty quiet on Twitter. So I thought we would just do a crypto update on Bitcoin, Dogecoin, and then an article that I read on the Wall Street Journal. IRS is coming for your crypto. So we'll review the article and we'll go from there. So hey everyone, I'm Sebastian. Let's jump right into it. So crypto update, if we look at it, the NASDAQ 100 is down for the day. We're looking at the daily time frame. And then Dow Jones Industrial Average is actually up for the day. And the S&P 500 is down for the day. Bitcoin looks like it's coming back up. It obviously bottomed here a little bit on the RSI. And we're having a nice little pullback going back up. We want to see that trend continue. Dogecoin, for the most part, was obviously down a little bit, as was everything else. But if we look at the 1 hour chart, it is starting to kind of come back a little bit. I would like to see the RSI a little bit lower and the price a little bit higher to signal us another little bull flag going back up. Litecoin, same thing, starting to come back up a little bit, which is good. Everything's starting to kind of go back up in the green mark. Litecoin is up, the most out of them is up 8%. And then Cardano was up nicely and then obviously pulled back a little bit. Now it's starting to come back up a little bit. So it's up 3.5% right now. So if we look at Elon Musk's tweet, he only had one early in the morning, about 23 hours ago. To clarify speculation, he stated Tesla has not sold any Bitcoin. So that is a good thing. I think that's going to be a driver for Bitcoin to go further up from here. We may, bounce around this line a little bit and then head back up. But if we just think about it, Bitcoin has had a major pullback. It's down about 36% from its all-time high, which is good. So this is our second correction that we've had so far this bull run, which Plan B on Twitter is saying that it's looking like the 2013 bull run that we had before. If that's the case, we're looking at pretty good all-time highs by the end of the year. So, and then if we look at Dogecoin trends and Bitcoin trends, we can see over the 7 days that they've been kind of tracking the same way. But the interesting thing that I found on Dogecoin, related course to Dogecoin, woman forced Dogecoin millionaire. Don't know what happened there. Dogecoin millionaire gunpoint. So was Dogecoin millionaire held at gunpoint? And then will Tesla accept Dogecoin? Tesla accepts Dogecoin, and Goldman Sachs Dogecoin. So that's something I want to look into a little bit further as far as is Goldman Sachs going to provide custody for Dogecoin? And then if we look at Bitcoin, obviously everything that's happened in the last couple of days with Elon Musk tweeting about Bitcoin and fossil fuels being used to mine them. So how does Bitcoin mining use fossil fuels? Number two is, how is Bitcoin bad for the environment? Will Bitcoin recover? I think Bitcoin will recover. And then why is Bitcoin bad for the environment? And Elon Musk Bitcoin tweet are the ones that are the top trending queries for Bitcoin. But now if we go into the actual article that the IRS is coming for crypto investors by Lauren Saunders from the Wall Street Journal. I thought this was kind of interesting, especially since yesterday was tax day and you had to pay all your taxes. I had to pay my taxes. I paid them a little bit in advance. I think I paid them a month and a half in advance. I just had the money and wanted to get it done and over with. So, excuse me. So if we look at the article here, we'll go into details on it. Let me see if I can zoom that. Oh, maybe too far. Let's go there. So cryptocurrencies are exploding, and so is the Internal Revenue Service's pursuit of Americans who aren't paying taxes on them. If you aren't paying taxes on them, you should be paying taxes. With tax day approaching, it's a good time to clean up your act if you've been lax on about taxes on crypto. Not doing so could compound future tax problems, especially if you have traded a lot or have more than a small stake. Right now, I'm just accumulating. I haven't sold anything. I've been just buying as the market has been dipping. So once I do sell any of my cryptos, I will be making a nice contribution to Uncle Sam. So 2 new IRS efforts to find crypto tax cheats stand out. In April, a federal judge in Boston approved an IRS summons to the payments company known as Circle and its affiliates, including Poloniex, to turn over customer records to the agency. And in the early May, a federal judge in San Francisco approved another IRS summons for records for the crypto exchange known as Kraken. I haven't used Kraken. I've used Poloniex in 2017, but I actually lost money there, so go figure. In both cases, the turnover applies to customers who had more than 20,000 transactions in any year from 2016 through 2020. So if you fall into that category, you might get a nice little letter from one of those two firms or the IRS. The IRS is mounting a full court press to show taxpayers how seriously it takes cryptocurrencies compliance. Taxpayers should take it seriously too. You should. There's no way of going or getting around it, I think. The IRS is just going to be getting more and more people involved with it, and they're going to be coming after you. So pay your taxes. The Kraken and Circle summons are the IRS's way of getting at information it can't otherwise. There's little to no such reporting required of crypto exchanges currently. This lack of reporting can make Bitcoin, Ether, and other cryptocurrencies attractive to criminals and tax evaders, and the IRS is determined to go after them. Excuse me. A spokeswoman from Kraken said, "We are concerned about governmental intrusion into our customers' privacy and hope to work with the IRS in a way that protects our clients' interests." The judge has invited further briefing from Kraken. I don't know where I stand on that. I think it's, if you're doing everything legit, there's nothing to hide. So nothing to worry about intrusion or anything like that unless you're doing something under the radar. So in 2016, the IRS received approval for a similar summons of the crypto firm Coinbase Global and obtained information for about 13,000 customers. The agency sent letters urging many of them to make sure their crypto taxes were paid, as the IRS might soon take a hard look. So I've been using Coinbase since 2017 bull run. I haven't sold anything, so I've been holding on to it. I should have sold something when it was at the top. I did not thought it was going to go up higher with Bitcoin. What did I have? Bitcoin, Ethereum, and Litecoin, and I just held on to it till now, and been just adding to my position ever since. So luckily, I didn't get any kind of letters because I haven't sold anything, so we're good there. Continuing on, to justify the new searches of Kraken and Circle, the IRS divulged some results of the Coinbase campaign. In court filing, the agency said it had received more than 1,000 amended tax returns and collected $13 million from crypto holders with more than $20,000 of transactions, plus another $12 million from other crypto notices and audits are ongoing. So that's a lot of cash that was conducted on Coinbase. And a lot of people obviously made a lot of money where they had to pay $13 million. So if you look at just short-term gains, we're probably looking at over $100 million in profits. From some people, close to that, 80, 90 million in profits. Let's say they have to pay $13 million to the IRS. Some Coinbase customers have entered the IRS's voluntary disclosure program for taxpayers with criminal liability. This program usually lets participants out of prosecution but imposes large penalties. So, end story to that is make sure you pay your taxes or you are going to be dealt with a hefty fine that obviously nobody wants to pay. So I'm all for it. If you make $100,000, I have no problem paying $20,000, $30,000 to Uncle Sam. I have to keep $70,000 of that. I'm happy. They're happy. Let's continue on. The IRS also cited, without name, several taxpayers it has been examining who had accounts at Kraken and Circle, among them one person who didn't report more than 5.6 million of crypto transactions, most from a Kraken account, and another who filed amended returns as a result of Coinbase search revealing a 1.6 million in unreported crypto transactions, some at Poloniex. So those are huge amounts that people obviously made on it, and they were probably thinking that since they're cryptocurrencies, there's not a lot of regulation on it and a lot of laws governing it, that they could get away with it. Obviously, you can't get away with it. You got to comply. When the judge in the Kraken case took issue with the broad array of information sought by the IRS, the agency responded by saying the information received from Coinbase was insufficient to identify 750 Coinbase customers who sold more than 100 million of crypto. Holy cow, that's a lot. So that's a lot of cash, obviously, that Uncle Sam is looking to get. As a result, Kraken may have to turn over phone numbers and email addresses as well as the customer's names, date of birth, taxpayer ID number, and physical address. So if you're one of those people that has transacted over $100 million, they're coming for you. As Mr. Ford noted, the new searches are only part of the IRS's current campaign to combat what it thinks is widespread tax cheating on cryptocurrencies. Last fall, the agency moved a question. Let me start over. Last fall, the agency moved a question about crypto holdings near the top of the 2020 tax return for filers to check yes or no, raising the stakes for cheaters. I filed that I do have cryptocurrencies, so I'm in compliance there. It's also working on regulation to require information reporting on crypto trades akin to what brokerage firms report on their customers and to estimate a tax gap for crypto taxes owed but not paid. So that's one of the problems that we were seeing right now is with like Coinbase, Kraken, Poloniex, Binance. I don't know about Binance and Gemini. But the problem is when you have like a Schwab account or E-Trade account, at the end of the year you get your statement. This is how much you made, how much you lost. This is what you basically have to pay the government. So it would be nice to actually have something like that with those firms. The bottom line, if you've gotten a free tax right on cryptocurrencies, don't count on it continuing. Ignoring this issue could bring a large future IRS bill for penalties or even criminal prosecution. For those confused by the rules, here are the key points, and these are important. In 2014, the IRS declared that virtual currencies are property, not currencies like dollars or francs. Often they are investment property akin to stock shares. So if you hold cryptocurrency longer than a year, long-term capital gains taxed at lower interest rates than ordinary income under current law. If you hold it for less than a year, profit is short-term capital gains taxed at the same rate as ordinary income, like wages. So anything you've held for over a year, you have to pay less on taxes on it. Anything shorter than a year, you pay more on taxes on it. Capital losses can offset taxable capital gains on other assets as well as crypto, plus up to $3,000 of ordinary income such as wages a year. If a worker is paid in Bitcoin, then income taxes, payroll taxes, or self-employment taxes are likely due as well. So not only do we have to pay that, but then also if the price appreciates and you're still holding on to it, you have to pay on that as well. So that's not fun. Tax triggers. Sales and exchanges of cryptocurrencies are taxable transactions. So this is an example. If Max swapped Bitcoin for Dogecoin last year, he likely has a capital gain or loss on his Bitcoin. And then if Margaret pays for a car, not a Tesla, or dinner for friends with cryptocurrency, she likely owes taxes on the transfer, much as if she paid for the car or the dinner with the shares of Apple stock. So if you use any cryptocurrencies to buy anything, you basically have to report it as income unless you bought Bitcoin for $65,000 and bought something with it for $45,000 and you're out of Bitcoins and you actually have a loss. So you could do that. Obviously not a tax financial advisor, so make sure you speak to one about that. These rules mean that crypto is unwieldy for making payments. Crypto advocates want the IRS to allow a de minimis exemption, say of $200 of a gain, but the agency hasn't budged. And then lastly, crypto forks and airdrops. So crypto forks, we had one in 2017 where Bitcoin and Bitcoin Cash forked out and you ended up getting both. So you would actually have to pay on the Bitcoin Cash if you had it for the airdrop or for the forks part of it. If the taxpayer receives something of value, it is likely taxable at ordinary income rates once the taxpayer controls it. So once you get something, it's in value, you have to report it and pay on it. Lot identification. So this is kind of an interesting way of doing things, especially if you bought Bitcoin way earlier on and continue to buy it on as price has appreciated. So investors who are selling some but not all crypto holdings bought at different prices can often minimize taxes, sometimes a great deal, by specifying which lot they are selling. For example, say that someone sold Bitcoin at 22,000 each in December 2020 and had coins bought in 2016 for 600 and 2017 for 16,000. Selling the 2016,000 coins would mean a taxable gain of 21,400 each, while selling the 2017 coins would mean a gain of 6,000 each, which is a big difference. Keeping good records of crypto lots can be hard because platforms may not be set up for this, says Jordan Bass, a CPA and tax attorney with the taxing cryptocurrencies. He often recommends transferring crypto not slated for sale to a cold wallet. You can think of the Ledger wallet, and then moving it to a hot wallet shortly before a sale to clarify what's being sold. So that's actually a pretty good tip there. It's hard not only to get all the transactions right, especially if you're transferring things between accounts and cold and hot storage. The best thing to do is keep as probably like an Excel spreadsheet or something like that, just with all of your transactions, and try to pair it up as best you can, because the Coinbase and Kraken and all the other ones aren't going to do a great job of doing that for you. Reporting of crypto held offshore. I thought this was interesting as well. So in late 2020, the Financial Crimes Enforcement Network, a Treasury Department unit separate from the IRS, announced that it may require U.S. taxpayers holding more than 10,000 of cryptocurrencies offshore to file a FinCEN Form 114, known as the F-bar, to report these holdings. This rule has been adopted and wasn't in effect for 2020, but it's another sign that the U.S. authorities are intent on shining bright lights on crypto's dark corners. So the takeaway from this is file your taxes. If you make a gain on your taxes, obviously note it, how much you made, and then file with the IRS and be in peace with it. Basically, you don't want to get in trouble over something that's, obviously could be life-changing for you. If you make, 50, 100,000 on trading cryptocurrencies, pay the IRS, you'll sleep better at night knowing that you've done everything right. So with that being said, thank you so much for watching. I post a new video Monday through Friday and sometimes on the weekends. So if you find these videos useful, please smash the like button and please consider subscribing to my channel. It helps me out tremendously. You can also support me on Patreon. All of the links are in the description, including the news sources. Have a great day, and until next time.